Tesla is currently trading nearly 10% up today off of a pretty crazy ER report. Is this sustainable? Is this going to be the stock that pushes consumer discretionary in the right direction and continue this short-term bull reversal?
Could have been on Wall Street. Should have been on a ball team. Could give a fuck about y'all team, cause I don't really feel none of y'all. Morphine, Wall Street.
What's going on, guys? Hamilton here with the Trading Initiative, and as of right now, Tesla is trading up 9.66%. It's 1:20 p.m. Eastern off of a crazy ER report. Within TTI, we do not worry about necessarily what the ER report said. We understand the ramifications behind guidance, etc., but we don't specifically trade that. For whatever reason, the market absolutely loves the fact that Elon and Tesla sold off 75% of their crypto holdings. It kept them cash positive through an otherwise unprofitable Q2, and the market has rewarded them with a massive nearly 10% move. Talking through a technical lens only, I want to focus on a few things here. One, we are above the 50 RSI, showing a bullish momentum regime. Anytime the RSI is above the 50 within TTI, we would prefer to go long than short. This shows us that buyers are continually looking to purchase Tesla regardless of what the price is. So RSI is above 50. This is our first green light to potentially be going long Tesla. So this pattern right here is invalidated, but the actual move off of somewhat of a horizontal level that had been forming in Tesla somewhere around 765. There's some sticky resistance, some overhead supply here that we were unable to get out of. We were finally able to break up and over it today off of the ER report, right? Not only are we consolidating at the 50 and now breaking above it, but we're also breaking out on high volume. And I think that's one of the biggest things here is that our vol, as you can see up here, is at 1.12 relative volume. Anytime you get a high volume breakout, that is a very good indication that the breakout should be sustainable. Like I said, it's 1:24 p.m. Eastern right now, and we're already up and over 1 RVol. This thing could very easily close somewhere around 1.5, and if the end of day gets super crazy, potentially even 2 RVol. That is a very, very big move for one of the largest companies on the market. Not only are we getting nearly a double-digit move, but the RVol is absolutely through the roof. And also, take up a look up here at this ADR. That's your average daily range. Right now, Tesla is averaging a 5.3% move, a 5.3% move intraday on the candle from peak to trough. If we go ahead and just verify that, you can see that we're already up and over that 1x ADR. We've moved 6.58% intraday here from peak to trough. That means not only is there crazy RVol, relative volume, but the intraday moves itself are more than average. All of this right here is painting a picture that Tesla this is a sustainable move from the way that we're looking at it within TTI. Now, we do understand that on high volume breakouts over horizontal levels, there's typically a pullback. Let you guys in on a little secret. Statistically speaking, there's a pullback 2 out of 3 times. Now, I'm not going to sit here and tell you that it's going to pull all the way back to 760, although that would be a gift for somebody looking to get in. But I would expect Tesla to have a slight pullback tomorrow morning, maybe even a test down here at this horizontal level. That would be perfect. We could buy into that dip, get some cheaper contracts, and position ourselves with a potential upwards move after the bounce. But as of right now, within TTI, I don't believe anybody is in Tesla. We don't play earnings plays. But we are actively watching this because, like I said, our vol is incredibly high. ADR is incredibly high. We have moved more than one ADR. We are expecting a pullback tomorrow off of a high volume breakout, and we are above that 50 RSI. So all of these things are setting up for a absolutely incredible opportunity for Tesla, but we don't want to chase price here. Having said that, this move does feel different. ER does feel different. We've been talking about this for the last 2 weeks, 3 weeks within TTI, this potential floor in the market that we've been noticing through risk on areas. If you listen to the last few videos I posted on YouTube, we have XBI, ARK, and IPO, 3 very risk on areas of the market showing a potential accumulation pattern plus a potential breakout. Tesla is now confirming this in one of the largest stocks in the market. Not only is Tesla confirming this, but let's look at consumer discretionary itself. Tesla and Amazon round up the 2 biggest stocks within consumer discretionary sector. And this is a very risk-on growth-oriented sector. And what we notice is we have a period of higher lows and a period, well, you could say lower highs, which would be somewhat of a symmetrical triangle, same sort of setup as Tesla. But when we were looking at this for the last 2 weeks, we're looking at it as more of a horizontal level break. If you're a classical technical, chartist, this is an ascending triangle breakout, if you will. We didn't necessarily play this. What we're looking for is a series of higher highs, and we got the confirmation a few days ago, and Tesla is continuing the pressure to the upside. Now, we made a commitment within TTI that we're not necessarily going to go out and buy XLY related names until we, at the very minimum, get up and over this June high. A lot of the market, many market participants were faked out on this pop-up. We made a decision as a group that we might miss some rewards, but we're definitely not going to fall for the same trick that fooled a bunch of previous market participants. So above this 157.5, 158 level, we're going to potentially start accumulating some consumer discretionary names, Tesla, Amazon, things like this. And then obviously we want to keep in mind that this is the next real support turn resistance level. So when we get in on that 158 area XLY, we're going to focus in on that 167, 168 area as a potential first resistance zone. Manage our positions up here at this 165 to 168 level. This gives us a clean runway though. We break above this level, we can reasonably expect price to continue on up to the next resistance area, and we'll see how we act there. But the biggest thing here is, yes, Tesla's going nuts, right? We've talked about this. We understand high RVol, high ADR, RSI above 50. Everything looks great. We expect to pull back tomorrow, but the trend should continue upwards. XLY looks great. I want to point out that Amazon is the other name here within XLY. You can kind of see what we've been looking at here. We have a triple bottom, quadruple bottom, whatever you want to call this. This is a floor, though. This is a support level. Amazon was unable to break below, and we've now created our series of higher highs. Amazon, kind of like the XLY, we don't want to get long until we clear this area. I know that we've missed out on a few days of profit, but we want to be on the less risky side. I would prefer to give up some of that reward to greatly reduce risk. Wait to get into these names until we're above overhead supply. But Amazon and Tesla are the two biggest names within XLY. And I think that, within the construct of what the market is doing, we need to be looking at these stocks in particular as potential leadership roles. If we look at Koifin really quick, we see that XLY over the last month, Tesla and Amazon 23.75 and 17.86% respectively. Amazon and Tesla are the weight within XLY itself, so they are the lion's share of the consumer discretionary area, at least within this ETF. Over the last month, Amazon is up 13.77 and Tesla is up 14.33%. Consumer discretionary has been doing reasonably well over the last 4 weeks, something that we have been noticing within TTI, and we've been talking about it every single day. Right, so we're looking at these two names in particular, Amazon and Tesla. They're the two biggest names by market cap within XLY to assume leadership roles. And as of right now, off of this ER move with Tesla, I think it's reasonable to expect that Tesla is starting to assume that leadership role. And I don't know about you, we talked about this in a previous YouTube video, but the market just seems better when growth is leading. When these big growth companies are really taking charge in leadership, it feels like the entire market moves more efficiently, and that's kind of what we're seeing. There is one yellow flag I want to point out, though. I'm going to give you guys a look really quick on some of these names within XLY. O'Reilly Automotive up 14% on the month. There's a lot of double-digit movers. Starbucks is up 14%. Lowe's is up 11.5%. So Home Depot's up 12.25. There's a lot of big winners here within XLY over the last 4 weeks, but I want to throw a yellow light in here, right? RCD. So hear me out here. RCD is an equal weight consumer discretionary. And so if you look really quick at XLY, you can see the weighting is changed, right? Amazon's 24%, give or take, Tesla's 18%, etc. So obviously, if Amazon and Tesla are performing very well, it's going to skew the results of XLY because they're putting more priority on some of the bigger names. But if you actually want to see what the overall sector is doing, where everything is remotely the same, you can pull up RCD. It's your equal weight consumer discretionary. You still have Amazon, you still have Tesla, right there. But look at the weighting difference. Everything starts at 2 with Etsy and comes down all the way to about 1%, I believe 1.43%. So this is a more true look at the overall sector itself. And once again, you can see the returns here. Etsy's up 32% in the last 4 weeks. That's pretty crazy. O'Reilly again, Amazon. You have Las Vegas Sands is up 24%. You have Domino's Pizza up 7%, etc. This name in of itself is showing us great relative strength. We understand that equal weight consumer discretionary is doing very well, but on a day where XLY is absolutely killing it, once again, XLY right now is up 1.47% on the day. RCD is actually slightly down at 0.55. And that's a little bit odd, right? You would expect that in a market that is really starting to reward risk on, that the entire consumer discretionary sector should be up. And that's kind of how we're looking at it. It's not necessarily a bad thing, but it is kind of off. Now, you could argue that maybe the market is rewarding Tesla and Amazon more so than others because they're the sector leaders. Sure, that's fine. But generally speaking, RCD and these equal weighted ETFs, it's like the tide rises all boats sort of situation. And so if the market really wants to and feels the need to start climbing back into consumer discretionary names, I would have just liked to see RCD green on the day. Like I said, it's not necessarily the worst thing in the world, but I do want to point that out. Now, RCD is above the 50 RSI as well. And like I said, RCD is up off those lows in June. If you've been following the YouTube videos the last few sessions, you know that May and June lows are a big deal around here. RCD is up about 12-13% off of those June lows. So as of right now, ironically, everything looks really good. We like the Tesla pop. We're going to wait to enter in on a pullback, but we like what it's doing for XLY. We like what we're seeing from RCD. The entire sector is moving very well. There's one other thing that I can point out here. If we go back towards Koyfin and we look at US sectors, let's actually get rid of the U.S. industries, click all U.S. sectors. And I just want to point something out really quick. On the year to date, there's two time frames we're going to look at. First one is year to date. I want you to focus on two things, XLY and XLC. So what we do in TTI, and it's a very big, literally one of the most important things, and it's the first step that we do, is identify sector and industry trends. We want to get a jump on what is the market rewarding and what is the market punishing. And what we noticed within XLY was over the last month-ish, we've stamped at a bottom and started hitting a series of higher highs. And we've been looking at XLY and saying, hey, all of a sudden the market's not, if I just hover over XLY, you guys can see that this is damn near a consistent downtrend the entire year, other than a brief period in the middle of March to the beginning of April. A consistent downtrend. Why is the middle of June through current date, which right now it's July 21st, why is the market not hitting any more lower lows? Something is going on with XLY, right? Also, XLY was, at one point, the worst performing ETF, sector ETF, this year. We were down massively. As a matter of fact, the lowest that we got was down 34%. We were down 34% on the year within consumer discretionary, eclipsing XLC, which is your communication sector. That's your Google, your Meta, your Snapchat, your Twitter, etc., down at 3.5%. Well, now XLY has taken back over XLC as the second worst performing sector ETF. And although that might not seem like a lot, you look at tech as well, we're getting a series of higher highs off of those June lows. This is a big deal to see XLY start to outpace XLC because, like I said, Tesla and Amazon are such big stocks. People love to buy them and trade them. They are leadership type of stocks. We want to see these things start to lead. On the 3-month, I told you we would look at two time frames. So we're looking at year to date. Here's the 3-month. You can see the XLY. The uptrend is very apparent here over the last month. You can see it, higher highs, higher lows. Like I said, we're coming up on a previous resistance or support trend resistance on an absolute basis. You can see it here from a relative basis as well. So XLY is coming up, and it's actually outcompeting sectors like materials and real estate. On the 3-month chart, XLC is bouncing as well, not as aggressively as XLY, and you have XLK there hitting higher highs as well. So the growth areas of the market are performing better than the value. We went over that in the previous video, and I think, gut says, and we don't trade with gut, but the gut can give us some decent insights to where to look in the market. This Tesla breakout here on the high RVOL, nice ADR, is something more than just a nice day for Tesla. I think this could be the canary in the coal mine for bears. I think this is a great opportunity for bulls to take advantage of what's going on over the last 4 weeks. And as always, if we do get the pullback, we'll try to take advantage, but we are watching XLY like hawks.